I think the two biggest intangibles on some corporate balance sheets are brand and culture again. So the one I always highlight this with is Disney. Disney's a $200 billion company. What is the cultural and brand value of Disney? It's probably $1 trillion, maybe $2 trillion. Probably got the largest cultural brand value of any company on earth. And Web3 unlocks that because you can get the people who benefit from the brand and the culture to participate in the economy, creating network effects around it and valuation of the intangibles. Lyn Howard is a good friend of mine, and building up the Brevin Howard Digital, he took people out of the existing Brevin Howard asset management business, the hedge fund. He took the money market guys and the credit guys and said, right, go and figure out DeFi. Because they understand risk, they understand all of the things necessary. And there were so few people in the space who did. I thought it was genius.
That's ironic.
Institutional adoption. Where do you think we are? I mean, and how much damage have we just done to ourselves in this space? You know, talk me through where you think we are, the institutional adoption curve, and this damage, and how big a setback you think it is or isn't. So, I mean, my thesis was, you go through a blow up like this, and I use the hedge fund example, the post Bernie Madoff fraud. What happened was not what people thought. Right. Post LTCM, it wasn't the death of hedge funds; it was the acceleration.
And
because
the
suddenly it was the professionalization and the absolute acceleration of institutional adoption that followed that. And so I can see a lot of people now on Twitter like, "This is the end of it all." I'm like, no, actually, this is what you needed. For the next phase, because it's going to be much more investable. So yeah, it makes me laugh you saying that. Also, I say exactly the same thing, is like, institutions are price action followers, they're momentum in general. There'll be some who'll catch the turn, and the macro will change and the turn will come. And we've got, I mean, I speak to so many of these guys, and they've done the homework, as you say. They're all ready to do it. They just haven't pulled the trigger yet and are just waiting for that opportunity. But they've all got their custody, they've got their fire blocks or their anchorage, they've got their account set up, they're all ready to do something. They're just waiting for that turn. And I think that, you know, suddenly what they thought of as a 3 trillion market is now less than a trillion market. And the fact that the more ETH you buy, the more deflationary it gets, it's going to create a very interesting cycle this time around. And the $1 trillion question is, okay, we've talked about the next 18, 24 months. That's a typical hedging of bets. Where are we, do you think, in the point in the cycle? So I'll give you my view, is that I think we're at the bottom of the liquidity cycle. I think we're starting to see the rate of change of rate increases come down as inflation comes down, and therefore liquidity starts becoming less of a constraint because it's the rate of change that matters. And it's brought the markets down to that long-term exponential trend. So it kind of feels like we're right in the zone to me. Risk reward from these levels is kind of ludicrous. You don't get it in any other assets. Final question. Have you managed to get your clients to get their heads around such a volatile asset class that a 75% drawdown is normal and you'll be more than amply rewarded by the returns? So I clearly agree. And, you know, painful though these bear markets are, you know, if you look from low to low, they're always rising. You know, if just look at the Bitcoin chart, you know, even when you take the low, and I took it from like 2011 low all the way to now, it still rises on average at 140% a year.
I'll take that.
Even with the 70%, 80% swings within it. Yes. And people can't get their heads around it because people still think that this is a cyclical phenomena. It's cyclical in a secular uptrend, an exponential secular uptrend. Started the conversation with is when you got into this, you were looking at the blow up of hedge funds in 2008, and you realized that they needed to grow up. I would draw a very close parallel with what's just happened to CeFi, and the exchanges, and we understand they are now going to be forced by both regulation and investors to become serious about how they run their businesses. And it's no longer acceptable to be the wild frontier. And I think this is a good thing. Real-time mark-to-market a VC portfolio of early-stage startups. We're going bust. We're going to be billionaires. We're going bust, right? And then, oh, we've gone bust. You know, they will have that. And that's what we're doing, as you said. It's probably the world's largest, biggest, deepest experiment in real-time business models the world has ever seen.
Open to everyone to watch.
And participate in.
And participate in.
I mean, it's an amazing thing. You know, it's very interesting to see how businesses like Uniswap do compared to people like Coinbase.
Yep.
I'm also getting interested in decentralized exchanges like Uniswap versus centralized exchanges like Coinbase. Both have their merits, but whether there's going to be a blending of these two business models or something, but it feels like out of this whole FTX fiasco, issues we don't know is that regulation is a huge problem because there's no regulatory clarity. And what we don't know is if in the worst case horrible scenario that Coinbase was to go under or one of these other exchanges, whether those segregated custody assets are legally segregated or not, or whether people have a claim on it.
Yeah.
I'm also getting interested in is the decentralization of asset management. I think that's the next phase. You know, we're experimenting at Real Vision with how can we do this? How can we make crowdsourced portfolios? Do you need all of the infrastructure? Because it's so expensive to set up a fund, but you can spin these up on chain actually very effectively. And I think that's a big disruptor. How are even you at Franklin Templeton thinking through that? And what are clients thinking through that? Another interesting one. We've seen people doing a lot with carbon credits and stuff on chain. But a good friend of mine, Lawson Steele, who's about the best single analyst in the whole space about carbon, he started a chain which is the actual EU carbon itself, the regulated EU carbon that all of the polluters need to buy. And that's come on chain and he's made it composable. So therefore people can then build businesses. So you could have streaming payments from Amazon pickups, you know, where Amazon trucks, they stream every time they go a mile and they buy carbon as their offset stuff. It's really interesting.
I love it.
Other thing that I think is really interesting from the institutional space that I've talked about is ETH staking yield. ETH now becomes, you know, if you accept the currency risk of ETH, it's like a local currency bond, you've got a guaranteed yield essentially on it. And I feel like this sets the benchmark risk-free rate for Web3, and that you could, CeFi should have been its ETH plus 300 basis points, like we used to from the traditional world of using LIBOR plus or Treasuries plus. Management business, the hedge fund, he took the money market guys and the credit guys and said, right, go and figure out DeFi. Because they understand risk, they understand all of the things necessary. And there were so few people in the space who did. I thought it was genius.